Islamic Capital Market Instruments we are going to discuss. After our discussion, we will be able to identify and describe feature and type of Islamic Capital Market Instruments. In general, in any market, in conventional, if we see, we have a lot of options. We have equity market, that is dealing in public listed companies. They can float their shares. It's about mutual funds, it's about private equity funds, and there are always special purpose funds created in any for the investor preferences. Then we have Islamic fixed income instruments, that is more into certificates or bond, Islamic bond, that is we call as sukuk. We have Islamic structured products and the derivatives. Let's discuss the concept of equity in terms of Islamic ICM and related to the concept of public listed companies. First of all, if you are an entity and you will develop yourself as listed, you will go to stock exchange, you will float your shares. Shares can be of several types, mainly it is ordinary share when you sell your ownership and you get money out of this contribution of shares in the market or of this effort of floating. And another way of this is the preference share, which is a hybrid equity consideration when you issue against a fixed promises. In both cases, these are conventional way of doing equity market. When it comes to Islamic equity markets, we have a screening process which I will explain you. When it comes to Islamic shares, Islamic shares are derived from the same mechanism of the conventional shares, with the slight changes into, but the share should be according to the Sharia compliance. And in terms of Sharia compliance, of course, first of all, we should know that there are certain type of businesses which Sharia does not allow us to do. So once it is not allowed, then we cannot invest in that kind of businesses. For example, any company who is selling alcohol, people who are selling non-halal products, and people who are working in an industry which is prohibited by Islam. So when we are going to float share, we want to buy share, we want to sell share, the first criteria that we need to keep in mind that the company activity, nature of business should not be in the violation of the Sharia principles. We have screening process over equity. How we do it? First of all, we see who are the various providers of the stocks. Then we want to determine which are approved as per Sharia standards and which are not approved. And it's the same concept we are going to discuss more in detail later. In terms of capital market, of course, it's a market where capital market activities are carried out in a way that comply with the relevant Sharia policies. Share from the Islamic perspective represent a proportionate ownership right in an enterprise, and the main concern of Islamic equity lies in the activity of one company that issues the shares to the public. Let's discuss about mutual funds. In other language we call it as unit trust. Unit trust is famous terms in Japan, US and Europe. In certain other countries we call it as mutual funds. These funds are created for by a pool of investors. Sometimes it is restricted, sometimes it is unrestricted. It depends upon the type of the fund itself. So again, we have to do the same screening that what is the purpose of this fund and how it is going to invest, and we have to check at every step the Sharia compliance. Mandatory part of each fund is we have to appoint a fund manager who is going to run the show of the mutual funds. How it operates, of course, there is a deed developed between managers, unit holders and the trustee. These are in three pyramid shape. They are making mutually agreed deed. They invest in permitted investments. When we say permitted investment, we mean those investments, those activities which is permitted by Sharia. And they invest in stock, equity, bonds, notes, banks deposits and short-term papers. This is for the legitimate and allowable Sharia compliant activities, and they are subject to possible capital gains and the losses of gains and distributions of these gains. What are the main attraction in terms of mutual funds? Mutual funds is simple, it is convenient, it is less time consuming. Therefore, people prefer it. In terms of professional investment services, all investments are managed by full-time professional fund managers, so it's easy to carry on. Diversification opportunities are always available because it's a pool of investors. They can agree on certain specific or non-specific usage. Risk can be minimized in terms of proper effective risk management. It is affordable liquidity in such kind of funds is a salient feature of this. Let's discuss the Sharia perspective in terms of working structure of Islamic mutual funds or unit trust. There is a trustee, there is an investor who is going to appoint the fund manager. Immediately we will make a Sharia board. This board will be having competent people inside who understand the rules of law, Sharia law, and plus they have other capabilities based on the technical requirement of the fund, and they will going to invest in either Islamic equity, Islamic deposits, they are going to invest in Islamic fixed income instruments, and they are going to invest in Islamic papers. This is how the major functioning of the mutual fund, and there is no major Sharia issue with regards to the structure or feature of the mutual funds. Let's discuss the Islamic private equity funds. First of all, we should know what is a private equity. One equity is that is listed in the stock exchange, but all equities cannot be listed in stock exchange. There are equities which are traded over the other markets. In conventional markets, we have over-the-counter markets, we have other markets, alternative other investment markets, so which gives a platform for those investors who cannot go on a very large scale in terms of public listed companies. Same way they issue IPOs, like initial public offerings. They float their equities, investors buy for them, and they are going to have the returns on these equities. Sometimes we create Islamic specialized funds. These are the normal, in terms of conventional, we make a specialized fund. When we create the fund, we know what this fund is going to contribute to and what is the objective of these funds. We will see it is sometimes it is dedicated fund for and a lot of investors are focusing on achieving some common objectives. We have Islamic leasing funds. We create money into ijara and other products, which is we will discuss later in more details. We can create mudaraba community funds. They are based on mudarib concept, which is in mudaraba and musharaka. Technically, we have discussed previously, and we will keep discussing later. We have Islamic exchange traded funds. These are essentially open-end mutual funds that can be traded at any time through the stock market. They are designed to mimic the performance of the particular stock market index. So you can experience them in Dow Jones or some other exchange. They are growing day by day. We create Islamic Real Estate Investment Trust that is based on the concept of istisniya, and these concepts are based on the construction real estate assets. This is in Unit 12. I'm going to discuss more in details. Now let's see the Sukuk. Sukuk is another way of issue bonds, and bond traditionally is not an Islamic concept because it carries a fixed rate of interest, and this is a sort of it's a confirmed type of interest. Any interest-based instrument is not allowed in terms of Islamic commodities and Islamic markets. But Sukuk are based on another concept where you have an asset, and you as much this asset is an underlying asset, and as much you buy the equity, you become the owner of that particular area. So it becomes Islamic in terms of trade, and I will discuss the Sukuk functionality more in detail when we will discuss the Sukuk functioning. We have Islamic derivatives and structured products. Islamic derivative is any activity which derives from the economic phenomenon having a future delivery, and the happening is contingent to the future circumstances, which is if you see there is an element of uncertainty which is fall in gharar. So we don't consider that, but there are some other kind of derivative functioning in which we have different kind of models which we can based on salam and other things. So Islamic derivatives originate as a concept which is new, and of course there are a lot of workings going on in order to harmonize the basic concept behind this. We have Islamic forward forex, that is arises with the foreign currency exchange. Nowadays there is no option to close your economy and just deal with one currency. Every country has to be exchange between different currencies. There are gain and losses, how to swap, how to hedge. These are all challenges which can be encountered in terms of Islamic forex forward markets. We have Islamic options like call option, put options. How it works, this is I will explain later. And we have Islamic forward and future contracts. If you see conventional contracts, if you have a buyer, if you are a seller, and you agree something today, which will happen after a certain time, buyer and seller know each other, there is an agreed price, there is an agreed delivery. So this kind of contract is called forward. When you are doing some trade in future but you don't know the buyer that time, at the time of execution, cannot be called as forward contract, it will be called as future contracts. So we have salam, and we have other options which fall in the Islamic forward and future contracts. And we have Islamic profit rate swapping based on the fluctuation of the markets. This is based on the economic activity. How it works, we will discuss in detail in the next few discussions.